Hello, good evening viewers. Again I am back, and right now I'm just making my second video on salary. And in this video first I'm going to discuss in detail the deductions which are actually being available from salary. The first deduction that is available under section 16 subsection 1A, that is a statutory deduction of rupees 50,000 maximum. Secondly, entertainment allowance, which is covered under section 16 subsection 2. Firstly, the entertainment allowance received by an employee is added to the gross salary. Then deduction under section 16 subsection 2 shall be allowed only to the government, that is central and state government employees, and list of the following is deductible. Number A, amount actually received. Number B, rupees 5,000. Number C, 20% of salary. Here salary means only basic salary. Remember, no deduction is allowable to the non-government employees. Another important point you should note here, actual expenditure towards entertainment allowance is not deductible. It is irrelevant. Now I'm coming to the third deduction, that is called professional tax, which is covered under section 16 subsection 3. Professional tax or taxes on employment levied by a state is allowed as deduction only when it is actually paid by the employee during the previous year, and deduction is allowed on paid basis. If professional tax is reimbursed or directly paid by the employer on behalf of the employee, the amount so paid is first included as salary income and then allowed as deduction under section 16. Now I am coming to a very sensitive part, which is known as profits in lieu of salary, which is covered under section 17 subsection 3. In this, the first one is terminal compensation. The amount of any compensation due to or received by employee from his employer or former employer in connection with the termination of his employment or the modification of the terms and conditions relating thereto. It is taxable. Usually, such compensation is treated as a capital receipt. However, by virtue of section 17 subsection 3, the same is treated as a revenue receipt and is chargeable as salary. Next comes payment from an unrecognized provident fund. Any payment due or received by an assessee from unrecognized provident fund or other fund, to the extent to which it does not consist of employees' contributions or interest on such contributions. Number 3, payment under keyman insurance policy. Any payment due to or received by an assessee under a keyman insurance policy, including the sum allocated by way of bonus on such policy, is taxable. Next, any amount, whether in lump sum or otherwise, due to the assessee or received by him from any person before joining employment with that person or after cessation of his employment with that person, is taxable. And any other payment due to or received by an assessee from an employer or a former employer or any fund other than the payments exempt under section 10 is taxable. Now I am going to discuss about one important issue, that is called gratuity in the context of salary, which is covered under section 10 subsection 10. Any gratuity received by an individual on his death or retirement is eligible for exemption under section 10 subsection 10, and this can be summarized as under. In case of government employees, that is central or state government, employee of local authority but not statutory corporation, gratuity received by them is fully exempt. In case of other employees, we are going to group it into two parts. Number A, if covered under Payment of Gratuity Act 1972, then list of the following is exempt. Number 1, actual amount received. Number 2, rupees 20 lakhs notified with effect from 29th March 2018. Number 3, 15 by 26 days multiplied by last on salary for each completed year of service or part thereof in excess of 6 months. And the following important points are also to be noted. Number 1, salary means basic salary and dearness allowance, whether or not forming part of retirement benefits, and even it is on due basis. In case of seasonal employment, 15 days will be replaced with 7 days. Now I am coming to the second part. If the employees are not covered under the Payment of Gratuity Act, then list of the following is exempt. Number 1, amount actually received. Number 2, rupees 20 lakhs notified on 8th March 2019 but effective from 29th March 2018. And number 3, half month salary based on last 10 months average salary immediately preceding the month of retirement or death for each completed year of service. And here we are going to ignore the fraction of the service year. And there are certain important points associated with this. Salary means basic salary and dearness allowance if provided in terms of employment for retirement benefits. That is when DA is considered to be the dearness pay forming part of salary, and commission which is expressed as a fixed percentage of turnover achieved by the employee. So the salary will be basic salary plus dearness pay plus commission on sales. It should be on due basis, and half month salary should be considered as 15 by 30. Now there are certain important points which are also to be noted in the context of gratuity. That is, point number 1, gratuity received during the period of service is always taxable for all employees. Number 2, if employee receives gratuity from 2 or more employers, then aggregate amount of gratuity exempt from tax cannot exceed rupees 20 lakhs. Point number 3, where the employee has received gratuity in any earlier year and also received gratuity from another employer in a later year, the limit of rupees 20 lakhs will be reduced by the amount of gratuity exempt from tax in any earlier year. And the fourth and the last point, under the gratuity exemption under this provision will be available only in case where employer-employee relationship exists and otherwise not. Now I'm coming to the next concept, that is called pension. It is governed under section 10 subsection 10A of the Income Tax Act. Pension may be defined as a periodic payment made especially by government or a company or other employers to the employee in consideration of past service payable after his retirement. Now, pension may be classified under two heads. One is called commuted, another one is called uncommuted. Now, let me tell you what is the meaning of uncommuted pension. Uncommuted pension refers to pension received periodically. It is fully taxable in the hands of both government and non-government employees. Now I am coming to the next part, that is called commuted pension. Commuted pension means lump sum amount taken by commuting the whole or part of the pension. Now I am discussing the taxability of pension. Employees of the central or state government or local authorities or statutory corporation, any commuted pension received is fully exempt from tax. In case of other employees, let me tell you case 1. If the employee receives the gratuity also, then exemption is equal to 1 by 3 into full commutable value of pension. And case number 2, if the employee does not receive any gratuity, then exemption is equal to 1 by 2 into full commutable value of pension. Now, you have some question right now. What is the meaning of full commutable value of pension? So, in order to answer that, full commutable value of pension is equal to commuted amount divided by percentage of commutation. Now I am coming to leave salary, which is governed under section 10, subsection 10A. It provides exemption in respect of amount received by way of encashment of unutilized earned leave by an employee at the time of his retirement, whether on superannuation or otherwise. In case of central or state government employees, employee of local authority, statutory corporation are excluded. It is fully exempt. In case of other employees, leave salary received at the time of retirement is exempt from tax to the extent of list of the following. Number 1, rupees 3 lakhs. Number 2, leave salary actually received. Number 3, 10 months into average salary. And number 4, earned leave to the credit of employee multiplied by average salary. Now, automatically, the questions that are coming in our mind, what is the meaning of average salary? So, average salary will be determined on the basis of the salary drawn during the period of 10 months, immediately preceding the date. Mind, immediately preceding the date of his retirement, whether on superannuation or otherwise. Number 2, salary means basic salary plus DA, which is considered as a dearness pay, plus commission on sales. And on leave to the credit of the employee is equal to means annual leave entitlement not exceeding 30 days, and that is to be multiplied by completed year of actual service rendered. Fractions will be ignored, and from that we are going to deduct leave availed during the period of service. Now I am just mentioning certain important notes in this particular connection. That is, number 1, leave salary received during the period of service, that is during continuity of employment, is fully taxable. Mind that. Leave encashment on retirement by way of resignation will also be eligible for exemption. Number 3, where leave salary is received from 2 or more employers in the same year, then the aggregate amount of leave salary exempt from tax cannot exceed rupees 3 lakhs. And number 4, where leave salary is received in any earlier year from a former employer and again received from another employer in a later year, the limit of rupees 3 lakhs will be reduced by the amount of leave salary exempt earlier. Now I am coming to next point, that is called retrenchment compensation, which is provided under section 10 subsection 10B. Any compensation received by a workman at the time of his retrenchment under the Industrial Dispute Act 1947 shall be exempt to the extent of list of the following alternatives. Number 1, amount actually received. An amount calculated in accordance with section 25F subsection B of the Industrial Dispute Act 1947, that is 15 by 26 days average pay, that is 3 months basis for every completed year of service or part thereof in excess of 6 months, and number 3, rupees 5 lakhs. In case where the retrenchment scheme is approved by the central government, the entire amount is exempted. Now that is all about. So for my second video is concerned, now I am going to upload third video. So for this, goodbye and thank you.